Hello and welcome to Crux Investor. We spoke earlier today to James Withell, CEO of Rupert Resources. They've been quite the story of the last 3 or 4 months in the marketplace, having gone up 5 times. They're now an 800 million market cap company, Canadian. We talked to him today about what the future holds and if there's money to be made for new investors. And if you want our view and opinions on the conversation, the company itself, you can get that at cruxinvestor.com/club. You can also find company reports on there, market commentary from experts from all around the world. There's training videos, and there's also summaries of other interviews that we have done. And of course, there's a thriving community of investors on there sharing their thoughts and ideas with each other. And if you go there now, there's a 7-day free trial. And of course, we'd love your thoughts and input too. So do leave your comments below, give us a like. And if you want to see what we talked about, take a look in the description below. James, how are you doing, sir?
Good, thanks. Good morning.
Good morning. A fellow Brit, where are you?
I'm just in southwest London, actually, for an area called Surbiton, so working from home like many of us.
Yeah, right. You're quite the office setup there. And of course, what people don't know is that I used to live quite close to you. We worked out just before this call. We know a few of the same landmarks down your part of the world.
Yeah. Well, this is actually my wife's office, so I'm invading her space. So yeah.
Wow, that's quite a setup. Well, look, thanks for joining us. It's the first time we've spoken. We heard a little bit about the Rupert Resources story a few weeks ago when I chaired a panel that you guys were on. We were intrigued, and I'm really glad that you're on the show because since then you've had quite an exceptional set of drill results come out, which we're going to talk about later. But why don't we kick off first with that 1-minute overview of Rupert Resources for people new to this story?
Okay, well, Rupert Resources, TSX listed company. Our focus is northern Finland and the Lapland area. We have a project called Paatavaara. We're a gold exploration company for the most part. And, the focus has all been about demonstrating the potential to find new discoveries in this region that's been very underexplored. Our Paatavaara project has a mine mill that's fully permitted. We haven't restarted it because at this time we see our strategy in a line is effectively that we're trying to demonstrate the geological and economic potential of the assets. And we saw the best opportunity to do that is to really focus on the exploration that hadn't been done in this region.
Brilliant. Thanks, James. You've had quite a week of it, or quite a few days of it. Share price up over 800 million Canadian. That's a great day at the office, isn't it?
It's been fantastic to see people understanding what we're doing and rewarding obviously us through the share price. And I guess it's for many people it's very new to the story, but obviously I've been with the company now for 3.5 years, and it's not come about just by luck through a few drill holes recently. It's been 3 years very systematic exploration, building up lots of knowledge, and very patient shareholders that have been very supportive and have put a lot of money into this company.
Yeah, I bet you've got some delighted shareholders, certainly the ones that have been contacting us, that's for sure. Previous to May, you were about a fifth of the size. You've shot up. It now looks like I've kind of missed the boat. So if I'm a new investor looking in on this one, and I want your help to try and understand if that is the case, or if I should continue to, consider Rupert Resources as an investment, which is going to give me that growth and return that I need as a new investor. So can you help me with that?
Yeah, okay. So the approach you've been taking it's been very systematic, and it's obviously led to these initial discoveries. But I think it's important to understand that we're only very, very early on in this process. We only started exploring, I guess, stepping back a bit. When I joined the company, they were doing some very good exploration at the mine, and you mentioned those really super high grade results that we had. So the Paatavaara gold mine deposit was a very interesting deposit. I went to look at it as a fund manager. When the owners or when I wasn't at Rupert Resources, and the shareholders, many of whom I knew, said, "Oh, would you come up and have a look at this?" So long background with them anyway. I guess it's yielded some fantastic grades, and I think we were putting those out last year, and people were sort of interested. But there's always a lot of skepticism about exploration at what is a historic mine, effectively, and it's had some previous owners. It hasn't been run very well. So I think there's that. But the important thing is that an issue, maybe just stepping back a bit about the industry, is that, you know, most of the time, junior companies are in a hurry to be gold producers. They feel that that's their need. They want to be say they're a gold producer and do that. But that often, through doing that process, they forget that, you know, the best way to really make returns is to spend a lot of time really understanding the geology. And sometimes that just becomes like an engineering component, or we found a resource number of X, we're going to try and turn it into production. But you know, Rupert, the Passover project was a bit like that. You know, people had owned it and they had it as a bit of a project to make cash and short term, but no one had ever really looked at it, stepped back and said, what's the true potential? So we started doing that when I joined the company. And, you know, just on the mine level, we took our drill hit rate from like 20% to last year being 80% hit rate, really fantastic grade. So we see good potential there. And we do still, you know, we own a mine that could go into production. So I think, you know, people often forget about that today with the share price lift and the new discoveries, you know, that we've been making beyond that. But just staying with that, I mean, so that's one part of the business that I still see has phenomenal potential. And I think if you're following the region, we're going to see lots more people exploring, and we own one of 2 gold processing plants. Agnico has one, and we have the other. So that has one bit of potential. So I think people should not forget about that, and I think should look at that as, you know, potential future value. But on the exploration side, as I said, we've only been doing this outside of the mine for 18 months. And so these are all grassroots discoveries. No one's found these, no one's explored these areas before. And if we can achieve that within 18 months, what we're doing now with the approach we've taken, and we've really only concentrated on maybe 5 kilometers of what we have of a 20-kilometer belt, you know, we're not suddenly, you know, we're not about to let up on that exploration, that new generation exploration. So over the next 12 months, you know, our aim for our geological team is to try and cover the rest of that 20 kilometers as a first pass. So whilst we've made this Ikkari discovery, which we're putting out these, you know, 100+ meter intercepts, 150 meter intercepts of up to 4 grams. You know, that's just one of 6 discoveries, and we're hoping to add to that portfolio of discoveries over the next year.
Okay, but again, I'm trying to get to this point of where the future growth is going to come from, because you start off as a geologist, 7-8 years as a geologist, and then you kind of moved into the finance side of things, fund manager at Baker Steel, London, very well-known company in London. You see both sides of it, because you've talked about needing to systematically go through a methodical process, trying to understand the ore body. What is it that you've got there? Most juniors don't have the time or money to be able to do that. Okay. Do you think you've kind of passed that point of no return where actually the market's recognized you? I guess you're going to be able to raise some very cheap money compared to where you were in, you know, April, May this year, given your share price. So that's all good news. And your knowledge of what, as a fund manager, of what the market needs to see. Do you see those things are kind of a little bit more symbiotic in the sense that you can continue to deliver the way things are now? Or are there things that you as a fund manager, if your fund manager hat on, what would you be looking for from this company to ensure that there is future growth? Why shouldn't I be checking out now?
Okay, so I guess the whole systematic approach to it, that's what leads you to make the discoveries in the first place. And so, you know, you take it from geophysics, all these background things that, you know, to actually get there. But really what you're doing, and our approach has been to, you know, our shareholders prior to this year invested almost $35 million in this company over 3 years. So not many junior exploration companies have a budget of $10 to $15 million to spend on exploration per year. Now, as a fund manager, I always saw that as the biggest issue, really. Junior, you know, and sitting as a fund manager, you sit outside and think, oh, you know, they're, you know, half the money's gone in G&A and you're frustrated, they haven't done anything, they haven't achieved it. Well, that's because it's expensive, you know, and also, you know, there's 2 key principles that I've always thought about exploration. If you don't spend it's a very high risk sector, but if you don't spend the money, you're just increasing your risk, because, you know, that you have to spend a significant amount of money to discover mineral deposits. And if you find a deposit of scale, when you look back on it through time, you'll find you only spent maybe $20 or $30 an ounce discovering it, and you'll have created this value of $300. You know, that's how you make your 10x return on exploration. But unless you're actually, spending enough money at the beginning, you're never going to find that big deposit that you were looking for to make you that return. So I guess that's one sort of one element of it. And I think, with us, this year, I guess we will continue to spend at a similar rate. I actually don't think you need to spend any more money than that. But one of the key things what are we actually trying to achieve by doing this, and what's the real upside? We didn't set out to find another 100,000 ounces to feed a mill at Part of Oro for another 2 years. Our whole principle is that, and my principle on exploration is that if you're going to go into exploration, you've got to look in areas which have the potential to yield large deposits. And we're talking sort of 2, 3, 4 million ounce size deposits. The kind of deposits that have, 20-year lives to them, if they're producing at maybe 200,000 ounces a year. So the sort of assets that really are the bread and butter of your Agnico Eagles, your B2 Golds, even ultimately your Barrick Golds. Mark obviously always talks about tier one assets. You are looking to try and find those best possible assets. And so they're rare, but you have to have an approach that you might find the belt and do that. And so our entire focus is doing that. And so everyone in the company is sort of has that same approach to it. So that's what we're trying to look for. And every time as we go through the process of looking at our discoveries, we're from the very first 2 or 3 drill holes, we're deciding, does this new target that we're drilling have the potential to yield that kind of return? So we might only drill 10 holes, and then we might walk away, or we might drill 5 holes and walk away just because we don't think the system's big enough. But if we think something's good enough, we'll move that on. So you talked about how do you keep on adding value at this point in time then? Well, you keep on going through that process. So you don't just drill holes. You make sure you try and delineate size and scale as quickly as possible. You don't get caught drilling 10 meters apart from each drill hole, just trying to feed the market with drill results. You're just trying to quickly find out how big this could be. You do the metallurgy, you do the environmental work, you make sure all that gets into the market as you do them. Is it easy to process? What's the setting like? So, technical investors can understand that, but also corporates that are looking at these as assets can understand that as well, which obviously has the potential to generate value too.
So if I may, okay, I hear that a lot from a lot of juniors, the wishes and the hopes, and they understand the theory of how they do it, okay? And you say you need a lot of money because it's expensive to drill the holes to give you the data that you need and to deliver that process, right? So what I'm trying to get at, and it gives me, why I think it's important for me to understand this is because it gives me a view of how you're going to solve problems in the future to deliver this growth. So given that all junior explorers started where you did and wanted to achieve the same things, what precisely were the conversations that you had to be able to get the funds in? Why do people believe you, saying pretty much the same thing as other juniors do, to give you the capital to achieve the things that you've done?
I think, I guess, simply about, I guess we're going back now, about a year and a half ago now, we're almost getting up to, I sat down with the shareholders at that point. And so, when I joined, I looked at what had been happening at the mine. I thought, there's a great opportunity here at the mine, and that will be something in the future. But that was like 1 or 2 square kilometers of 325 square kilometers of land. And the most exciting thing when I joined the company was that the previous operators, whilst they'd all focused on the mine, their geologists had actually put in place these licenses covering 20 kilometers of this belt based on just on geophysics. And so I guess this comes down to this whole point. I'd probably looked at, 1,000 odd projects, hundreds of companies over the years. So you're always, we didn't do a lot of exploration investing because the risk return profile is quite frightening when you look at it. But we were technical, we were looking at great areas. So, okay, where would I want to put my money if it was mine investing? So every now and again, you'd see companies that held what we call sort of belt scale packages of the land that you thought would be really prospective. So that's when you'd do it and you'd support that exploration company over time. Rupert Resources had that and they'd acquired it for nothing at the bottom of the market. $2 million or $2.5 million. So they had all that in the company, but they just so far only focused around the mine, just like the previous owners. So I guess I went to them and demonstrated financially what the potential return profile could be if you started exploring beyond it and have success. And it's quite, I guess, if you take out all the glamour of the exploration, it's actually quite simple maths about how you work out the sort of semi-returns. So you just get to a point where, it's going to cost you X amount of money to find a 1 million ounce deposit. If you look historically at all the data, you can work out how much it's going to cost you. But we had distinct advantages at Rupert Resources. The previous owners had done exploration. Finland is a fantastic jurisdiction. The geophysics comes for free. So we had, let's say, in simple terms, it could cost you $80 million to find a 2 million ounce deposit. We already had $50 million of sunk cost that we got for free. So we weren't starting off with a typical junior with nothing, with a sort of dreaming or that this looks quite interesting. So we had that. But I said, but I knew that we could explore relatively efficiently. So I said, I'd like you to give me 12 months to do regional exploration rather than spend any more money at the mine. And it's going to cost X $1 million, effectively $15 million. So whilst they were nervous about it in terms of that, but we were able to put money in at regional valuation. Our market cap there was $100 million, so it wasn't that dilutive to do that. And in the end, they said, okay, well, I'll give you half, and then we'll see how you go in 6 months, and then we'll go on next. And so we started the process. We worked out a method that works best to do the exploration, and with a relatively short time frame, we brought in some very experienced people to help, in terms of to look over our shoulders that we know from the industry. So, does this have the potential? And so relatively quickly from starting the regional exploration, within 6 months, we'd started to get some interesting results, and that's it. And the proof of concept was coming. And actually, from that point on, we were able to then go and ultimately attract external capital, like Agnico Eagle investing, because they saw that our approach was working quite quickly. So I guess it's about focusing on what could be the sort of exponential style returns that you can generate if you're successful, but also we were fortunate that we had strong supporters and also a capital structure that wasn't overly diluted in the first place. Our shareholders' capital where we started out was I think it was in the order of $60 million of money raised in the company historically. Rupert Resources had about $30-40 million raised before it went to Finland. So we had a good capital structure to do it in as well. So we could raise a small amount of money, prove the point, and then that gave people more conviction that the returns might be there, those exponential style returns. And then I guess history is then, as over the last 12 months, we've demonstrated that repeat that process, and it worked.
I like that. I like the approach of demonstrating where value can be created. Again, when you hear it from miners, explorers, because some of the limitations around juniors are the fact that they don't have all the personnel or all the skill sets that they need in house to be able to deliver a project, because money is a constraint. You've kind of been crossing the bridge, as it were, between geo and institutional fund manager. The way that you've analysed it, the way you've just described it to me there, I can understand. I can understand where me as a shareholder could see some value, as opposed to the hopes and dreams of someone wanting to drill holes and explore for the sheer fun of it, because that's what they're into. And I do have those conversations a lot. So you appreciate that. Talk to me about Finland, though, because 10 years or so ago, I'm not sure if Finland was that, investable. You're a Canadian, North American company in Finland. There are a few more now, but 10 years ago, that was a very different environment. I know, because people used to come and ask me for money. These days, it's better, but there still seems to be this kind of unknown component to it. I mean, what's Finland like to do business? I know some pretty big names in there, but it all seems very quiet.
Quiet is one way to put it, but at the same time, the the mining code is very straightforward. It's very it is straightforward. It's very easy to do. You do have issues, and people say, oh, the licensing holding costs are quite high. And yes, it does cost a lot of money to own 300 square kilometers of ground. But there you go. And that's what's, why you haven't heard about it more. Juniors have been prevented because maybe, paying 20 euros a hectare when you own huge tracts of land, and our land bill might be 1 million Canadian a year right now, is out of the realms of a typical junior company. So they all took small package of land. The government has done a phenomenal amount of good geological work. So, they've, most of the large deposits in Finland, and Finland has some, I could give you a list of about 10, plus 2 billion NSR style projects that they've had over time, over the last 100 years. And some of them are obviously still active, like the Kemikro mine is, still going. You have the Talvivaara discovery, the nickel, which is now a state-owned operation. And then you have obviously things like Kevitsa up the road and Europe's largest gold mine, Kittilä, up the road. So whilst it's not active in the sort of Western Australian, maybe Canadian sense of things, that's actually a great advantage for me. I was like, I couldn't find, in some ways, a more sort of civilized, easy place to work in the world, because it's quite easy to do. The people are very honest. They're very technically very well educated. So I guess I do see the point that maybe it sailed under the radar, but then it only opened up to international exploration in 1995. So when they joined the EU. So in Sakatti, the phenomenal discovery by Anglo American was only made in 2009. So it's all relatively recent history. But then again, things like Kittilä mine, Surikuusikko and Paatavaara were discovered in the 80s by the Geological Survey. So you have a lot of information to go on. I often think about it, it's a bit like, you can compare it to those regions like Abitibi or Western Australia, but it's like 100 years ago in exploration time, you haven't had lots of people exploring and doing work apart from the government all that time. And with all respect to the Finnish geological community, I mean, it's been driven mostly by academic and government work, and less on commercial exploration. What I describe, what we do is commercial exploration. So that's what's changed. And actually, look, it's in the time I've been there, you've gone from just having ourselves and Agnico and maybe Orion Resources, sort of the active, gold explorers, to now having B2Gold, Kinross in there. Newmont have a stake in Mawson Resources. So it has changed a lot in the last 3 years. I think and with the discoveries we're making, you'll see that change a lot more. But I wanted to say just a bit about the people, because and how you run it in Finland, and probably this is a bit of a differentiator for us. I think it is we're almost entirely Finnish. I brought in Dr. Charlotte Seabrook is our exploration manager. She's moved to Finland, so all our people live there and they're in country. They live 25 minutes from work. Most of them have young families as well, so very stable workforce, but very well educated. But I'd say the big difference is to ask, how do we bridge that gap between other juniors, which have, how do you make those discoveries? One of the things we've really focused on is letting our geologists be geologists and not become data collectors. I think so. We free them up. They've spent a long time trying to train to be geologists. They've got to use that geology to make discoveries, not just become glorified data collectors, which unfortunately happens everywhere. And then we do the finance and overlay I do that with my CFO from the UK.
Yeah, I think that's an important point, as in, the success of exploration is what kind of drives that kind of blue sky thinking of investors. It's great. It's not just about continual, data collection for the sake of data. But let me talk about where you're at, though. You've had a great 4 months of it. Okay, share price is up 5 times. Nothing to argue about there. But with that comes a new set of problems for you. And this comes back to the question at the beginning, which is, where is this future growth coming from? How do you deliver it? Where do you focus your time and money? And how do you piece all of this together so that the market understands what it is that you're trying to do? Because you've got this 10% Agnico Eagle shareholder here, people are looking, oh, is this a takeout target? Or are you looking to build this thing and develop this thing, for the next 2 or 3 years? I mean, what are people buying into?
Okay, I think we don't try and pigeonhole ourselves into a takeout or pure explorer doing that. What we're trying to do, as I said at the beginning, the strategy is to demonstrate the economic and geological potential of our assets. How do you do that in this business? You just keep on moving them forward. As we find new things, we continually assess whether they have the potential to be economic deposits. So I've modeled hundreds of thousands of deposits. I could, DCF models, and we do the trade-off studies are constantly effectively going on continuously in our heads. So we're evaluating, as I said, what's the metallurgy like? What's the recoverability? What could CapEx be? Where would you put waste dumps? So, if you were to develop this kind of thing. So we're not sitting there waiting to do a study in the future. We're continuously evaluating from day one, sort of scoping these projects out as how they will look like. And how you'll see us develop the company going forward. And as I said, we're early days in the exploration. I think we've only put out 19 holes at Ickery. We've drilled, which is the order of like 8,000 meters. I mean, we can carry on drilling there, but I think we've only drilled regionally 25,000 meters all up, which is a small amount of drilling. So, expect us we've got to continue to demonstrate the size and scale of that discovery. We're going to demonstrate the size and scale of our other discoveries, and also be working on finding further new discoveries that we haven't yet made, because we see that potential. So that's one. But as we move, we will continue to move them all forward and develop them forward. And you can do this with a relatively small team and some good external consultants. As though, I don't want to be an forever exploration company. I'm not sure that that's a great business model, because our shareholders' capital, the shares out, will be in the hundreds and hundreds of millions before just like many others. Our plan is that we've been rewarded, and if people keep on if we continue to demonstrate we've got very economic deposits, the market will continue to reward us for that, and we'll be able to raise capital efficiently to take the company to the next stage. And if that's us developing them into production, for sure, we already have one mine, Partabara, that could go back into production with very low capital. If it's to develop a new company and bring it all production, we can achieve that. And as long as you're daylighting the value, you'll be able to do that in a capital efficient manner. If someone, our aim is to find, large, long life, high quality, high returning assets. By doing that, if we're very, very successful in that, someone may well come and knock on the door and say, actually, well, we probably, we'll take this off you as well. But that's not, that comes as a consequence of success rather than of forcing that to happen.
Right. So tell me this: you're a fund manager. You understand how to study the markets. You're going to have, with regards to these these trade-off studies that you do, as a fund manager, you must look forward at the market place and say, what's going to be the best time for me to monetize this, right? Because right now, there's a lot of what you've done, which the market's giving you credit for, and there's a lot of what the market's doing, which you're getting credit for too, right? So, and I don't know what that ratio is, okay? Because like say, you've done 25,000 meters of drilling, but it's a very high gold environment. So how long do you think you're going to be in a positive gold environment, looking at the market going forward? And, when do you think you should start looking at maybe monetizing this? That's the
one question that no one in the gold sector would like to feel that they don't know the answer to, because the one thing we can't control is the gold price. And as a fund manager, we just said the principle was that gold will outperform all other currencies because it's the best performing currency, because it is a currency rather than a commodity. And so if you have to continue to take that long-term view. So I guess we're not, the fact that the gold price has moved and people are looking at the sector, certainly is no doubt about it, that it's helped focus people's minds on this sector and also focus people's minds on the rarity of discovery and significant discoveries, because then people start looking at the companies, realize that they don't have long reserve lives. They're going to need assets like we hope to discover. So I think our only, I guess, it's very particular. When do I monetize it? I guess that it's somewhat, I guess we're looking to optimize the best possible value for it. So I guess if I looked at two ways, when we try and demonstrate, or putting the news flow in the market, say, okay, we have this, we've already discovered this, but we think we might have that again. We might have 2x. What else is there? And so our job is to try and demonstrate what could be there as well as what is there in a responsible manner. So that's how you do it. But also, I think the thing you really have to do is to demonstrate the quality of what you have, or the potential return on what you have. A lot of people discover ounces, gold ounces, or they make gold discoveries. You've seen many gold discoveries over the last 15, 20 years while I've been on the buy side and in here. But many of them never came to production just because the quality was quite poor. There's plenty of gold in the world to be discovered. Most of it's just uneconomic. The difference between what we're doing and that is that it's all about the economics of it. So can we find a deposit with better grade? Can we find a deposit with, the recovery is 95%? So I'm constantly looking at what is I guess maybe put my fund manager hat on it and do it that way. The average gold deposit has a 10% return tax, net profit after tax over its life, which is pretty average for all the risk for a gold deposit. But the companies who own the ones that have a 25% after tax return, they're your leading gold companies in this industry. We are totally focused on finding those and demonstrating those, because then the gold price is less relevant in the situation.
Okay.
Because
okay, so if I may ask again, keep your fund manager hat on, please, because there's a saying that, when we're institutional finance, which was take the money when it's there. Given where your share price is at, I know you raised $25 million, or nearly $26 million Canadian towards the end of July, but given where your share price is at, shouldn't you take advantage of the market now and go and raise a bit more?
I guess that's probably not a bad suggestion in terms of that. I guess we don't need to, and I guess I'm a shareholder, so I'm like, well, I don't know whether do we actually need to issue any more shares. This, I thought it doesn't really matter how much. So the maths is slightly different. The share price is one thing, but actually, if you look at a company's balance sheet, the amount of the dollars that they raise still goes as shareholders' capital. So if I go and raise another $50 million, my shareholders' capital goes from $100 million in the company to $150 million. My objective is to make as much a return on that $100 million. If I take it up to 150, if I want to take, so these guys, you're investing in an exploration company, you want to make like a 10x return on the money that's gone into the company. So if you start just saying, oh, well, I'll just take another 50 or $100 million out of the market, you've gone from maybe, if you turn $100 million into $1 billion, simple maths, there's your 10x. If you suddenly just go and take another 50 or $100 million out of the market, you've just halved your return on shareholders' capital. That's what's important. So I think we will prudently raise capital when we need it. And when we did this last financing, the aim was to issue the minimum amount of shares for the maximum amount of funds in. And we have $30 million today. We have Agnico with some warrants that are worth $11.5 million at $1, which had an accelerator in February 22. So I said, I am not a company that's suddenly going to go and turn around to the market and say, I've got 10 rigs, because that's, to me, is a bit of a pointless exercise. You can't understand the data and make the interpretation as fast as 10 rigs can drill holes for you. We drill 4,000 or 5,000 meters a month. That is a challenge. That's a good level for our team to manage the data and make sensible geological decisions and move the company forward and make discoveries. Having more money and spending it faster is not necessarily the route to success. That's all I'm saying.
Okay, so what are you going to do with this money, this 30 million plus this 11 million, which comes down in a couple of years' time?
As I mentioned, we have 3 to 4 rigs at times. We're going to do some more underground drilling at the mine. So our spend rate is about 1.5 million Canadian dollars a month. So and we're comfortable with that and what we can achieve with that and what we can make on that. So we will continue demonstrating said size and scale of the discoveries. We'll have one rig, we'll be moving one of the rigs to start doing new generation, we call it, work to find the next discoveries. And we'll be drilling back at the mine over this winter because we've talked about in presentations about having a new geological model and seeing upside there as well. So that's where we'll be progressive. But I'd like to think that by this time next year, before this time next year, we'd be demonstrating, what are the potential resources for these new discoveries, and going from our 500,000 ounce resource at the mine, which is still 5 times what we had when we bought it, to demonstrating the sort of global resource inventory for the company, which we think can be multiples of that.
Right.
And then begin to demonstrate what is the best route to unlocking the value in that discovery.
Great. Okay, I understand that process. Can you talk to me about the mill? It's huge. This is a big mill. How you're not going to get it up and running anytime soon. So what's the kind of cost of keeping that one in care and maintenance for now?
Well, part of our SY is 1,400 tons a day, 500,000 tons a year. So it's not so big, but it all depends on the grade you put in it, to how much gold you produce at the back. It's actually still permitted. It could be started up in very short order, the mill that we own. It's said, if you're thinking about $20 million to restart it, it'd be a year's time, that's the time frame to do it. But it's about, for us, it's been, again, go to this point, it's not about turning on a mine and producing gold bars. It's about turning on a mine and making significant free cash flow and as great a margin as you possibly can on the ounces that you produce. So we want to we see, certainly we could do that and we could generate a good margin at today's gold price, but we want to do a bit more work demonstrating what is the, really robust, the highest possible return, and actually, waiting a bit longer to make sure you optimize it, given the lives of these assets, is important.
Okay, so you've got quite a large land package. You've got the mill, which you can turn on at some point in the future when it's right for you guys. Any more acquisitions in the offing? Are you picking up little land packages here and there to kind of fill in some gaps?
We opportunistic. Well, our land package at Partabara is quite contiguous along the belt. We have been selectively picking up new reservation areas when they come available, where we see similar geological settings to this area 1 where we're making all the discoveries. So where we see similar geological settings to that, we've been acquiring new property as it becomes available. But we have a relatively strong portfolio. We joint ventured up. We have an asset in Red Lake, which you see we joint ventured that to a group called Trillium Gold Mines. They've got a great exploration plan for that. So our focus is Partabara on the project and unlocking that value. We have some assets in Central Finland that we're also working on at an earlier stage. But today, again, fund manager, I think we've got a good portfolio of assets. Would I want to take on anything else? Not with the team that I have. I think that would be too much of a stretch. It's about optimizing the value of what we already have. But we look at things, but not really. We still think what we have, really just the early stages of understanding.
Okay, you've got Orient Resources quite close to you as well.
Yeah.
Do you ever have conversations with them?
Yeah, well, the community all knows each other, and so everyone's sort of keeping an eye to some extent on what people are doing. Firefox is the other one that's there locally, and then you have Mawson Resources to the south, and S2 Resources has been working for many years as well further up the belt. So I actually think in country geologically there's good conversations. But I guess for us, where I see, if you really look forward to what's the opportunity. So we have this part of our mill that could become a central processing hub for discoveries by ourselves and others in that region. Our new Ickery discoveries may well have this size and scale to have, become a new production site, a standalone production site. I think I just let's see how the next few years goes and how it evolves and the exploration success.
Okay, last question. So with 3 to 4 drills going, how would you describe the kind of growth going forward? Is it kind of steady as she goes, or are you putting the mainsail up and you think that we could see meaningful growth coming over the next couple of months, couple of years, I should say?
As steady as she goes isn't good enough for me. I'm a bit more impatient than that. That's not really steady as she goes. Exploration it is a very expensive investment decision and usually pretty poor risk reward. So we're pretty much always got the mainsail up and pushing on ahead. Just make sure you've got a very good crew in place to run the ship. We'll be advancing this and demonstrating more and more as what we the potential from it. That's in a very timely manner.
Fantastic. James, look, thanks very much for giving us that run through of the company. Perhaps next time you can come on and get into the assets themselves and give us a bit more detail on that. But I just wanted to understand a little bit about the way that you think, the way that you're approaching this, and of course how you see the market going forward. So I appreciate your time. Pick up the phone and let us know when there's some good news ahead, please.
Will do. Well, thank you very much for the time. Much appreciated.